Hello, and welcome to Premium Bytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachari, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation.
Hey, good afternoon, Samir.
Hey,
Welcome
good
back.
afternoon, Sudhar. Yeah, welcome back after the holidays. It's the first time we're getting back on recording an episode here.
That's right. And I'm excited for your hat for obvious reasons.
Well, it's just coincidentally, I've been sporting my Michigan affiliations through our recordings. It was not conscious, but of course, over the holidays, right? Michigan won the national championship in football, so I figured it's appropriate to bring the hat in today.
Absolutely. No, I think it's a proud hat and you deserve it. So congratulations on it. I always enjoy people telling stories about their football teams and how much they're close to their heart. So it's a win-win for all.
Yeah, it's a bit, different for me than it is for others because I was at Michigan back in 1998 when was the last time the team, won the national championship. It was controversial. It was partial at the time. There was voting, and one poll was for Nebraska. Coincidentally, I'm wearing red, and the other was for Michigan. And there was a controversy there and all that. But anyhow.
Maybe I should do better color coordination next time. Well, no, I don't really have any affiliation to any of them, so I'm happy for you. I know we did the news roundup, the last one, and took a little bit of a time for us to come back onto this next one. But I'm excited to introduce the topic of today's podcast being around innovation and the role of innovation inside an insurance enterprise, and how insurance technology executives should think about it, and not that they're not thinking about it. What is our perspective on the different kinds of innovation? So I want to hear a perspective on the topic as well.
Yeah, would love to talk about it. Naturally, innovation has been top of mind for a lot of companies recently. Recently, I mean, in the last, let's say, 5-6 years, you start to see more and more companies having specific innovation groups formed with specific charges and responsibilities. So there's some observations we have from what we've seen with our clients and even just generally in the industry. So yeah, look forward to discussing it.
Yeah, I thought it might be a good idea for us to be basic grounding ourselves on defining innovation as a practical implementation of a business-led idea that results in a new product or a service for the insurance company, or a significant improvement on an existing product or service. There's a couple of keywords here. One is a business-led idea, and two, it's a improvement of an insurance product or service, or an introduction of a new. So does that resonate with you as a base context?
Yeah, I think it does, and I would just add in maybe parts that you've intentionally left out, but almost every innovation will have some role of technology being an enabler. There are some where technology really doesn't have a role, but most of them it will be. So I think that's just going to be in the backdrop of our conversation. And then the
Absolutely.
second piece is that the innovation is not always in an outward facing product or service, right? It could be internal as well, something that makes you become more efficient in how certain processes functioning. Or there's no change to the product, there's no change to the service, but there's an improvement in the experience and the quality of
Good
what is
point.
being delivered. So I know you commented on that as
I
the
kind of
second
implied
part.
that, but I think good
That's right.
clarification, especially on the tech-enabled. So I guess our big idea that we both are, putting forth in front of our audience is that a business-led and a tech-enabled, like you said, innovation is the way forward. But immediately my mind goes, and as I'm sure your mind goes to as well. There's that's been the way it is for the last many years. So what's new that we're surfacing here? So it might seem obvious, but I do believe that there are tensions that are inherent in an insurance company, especially a large enterprise like an insurance company, when dealing with a business-led, tech-enabled innovation. And I'm curious if you have a perspective on a few of these tensions that I just want to recognize as a grounding for our audience as well as ourselves who are specifically focused only on the insurance spaces. Like it's just not like we're not like a Google innovating or we're not like an Apple innovating, but we're like a traditional insurance company innovating.
Yeah, yeah. I mean, I do sometimes catch myself, in this mode of, well, am I being Captain Obvious by sharing an opinion on something? And I think you rightfully point out, right, that this idea of business-led, tech-enabled is not new news, and it's probably not even truly insightful to anybody. But I think it's worth a continual reminder because we do fall into this trap of being excited by some shiny new toy, some shiny new technology that has a lot of promise and potential. And then we start to run around trying to find where can I apply it? Where can I apply it? And while we intellectually, understand and acknowledge that we ought to approach things in a business-led, tech-enabled way, but we sometimes fall victim to this mindset and approach. And I know I do it too, right?
Absolutely.
Where our old friend artificial intelligence shows up again here. That well, where can I use it to make myself more efficient, right? Rather than talking about, well, what problems do I have in my day? How do I address them? And oh, by the way, this one, yeah, maybe I can leverage some AI capability to improve it. So that mindset, right? I find myself having to catch myself in it. So it's
And
more of a
I like
reminder, I would say, than anything new and truly insightful or changing anything.
And that's the hard part of I like the way you put it. Like even our podcast, as you and I brainstorm ideas, you and I discuss and put forth content in front of our group. We're being very thoughtful that we balance this uh, need of sharing something insightful, unique, but at the same time not overly going to the other end of the spectrum and talk about stuff that doesn't connect back to the realities of the insurance technology as it exists today. So I think that's a constant thoughtful balance that we're bringing to this. Hopefully our audience are seeing that.
Yeah,
I,
yeah, definitely. I think tying it back to where we are is important.
I'm curious, like the first thing I always wonder about this is this, insurance and risk or inherent innovation is a risk taking effort. But at the same time, I wonder if insurance is generally not seen as the most innovative, uh, maybe by design that, radical innovation is just like too risky, and anything too risky, the insurance industry doesn't necessarily want to take that up. So they gravitate towards more incremental innovation. Do you see that? What's your perspective on that?
Yeah, so I think when I think about this, I can see maybe as a first order of assessment, right, that one kind of identifies this duality that on the one hand, insurance is all about assessing and managing risk, whereas innovation is all about taking a risk. But as I probe this further, right, I think you get to the second order, which is this idea that the insurance expertise is not to avoid risk, it is to manage the risk, right? Insurance companies are in the business of taking risk from somebody else, transferring that risk to themselves, charging for it, and then managing it, right? So this should, in my mind, be applied to innovation as well. That sure, it's risk taking, but it doesn't mean you avoid taking that risk. It means apply the discipline of managing the risk to it. And in innovation circles, people always talk about this controlled chaos, right? That sure, the innovation process is chaotic and somewhat unpredictable and all that, but it doesn't mean it has to be. It doesn't mean all of it in its outward characteristics are chaotic, right? So you can manage it and contain it, and well, that is what the insurance discipline is about, right? Containing and managing risk. So I do think there's a case of, as a generalization that insurance enterprises do not apply risk management principles to innovation.
So I guess then I also agree. Generally speaking, they should apply, and if anything, innovation and insurance should be a lot more synergistic in that we should see a lot. But somewhere along the lines, maybe it's the regulatory guardrails that are inherent. Maybe it's the nature of these products being very nuanced, complex, long sales cycles, even longer service cycles in the case of a life or other kinds of products like that. And then in combination with that, the legacy nature of the industry, all of that, do you think that there's just too many competing tensions inside the industry that is stifling innovation?
Yeah, I think there's probably elements of all of these aspects. I also think that they should not be, crutches that we lean on as excuses for why we cannot be more innovative. So just to make it concrete, right? So in the P&C side of things, for instance, right, you've got the admitted markets and you've got the non-admitted markets, right? And guess what? The non-admitted markets are less regulated and they allow for more creativity in how you structure coverages and how you charge for them. And that is where experimentation on products and coverages can and sometimes should and ought to continue. And when something is successful, then it gets a little bit of a better regulatory garb and gets better packaging, and then it moves into being a mainstream kind of admitted market type of product. And you see, right, that sometimes the market dynamics, they change and the economics of that stop working, like we've seen in storms and catastrophes. And
correct.
Then that business moves out of the admitted market back into the surplus market and back into that realm for some change. And another way to call that change is describe that change as innovation. So I think some of this mechanism is inherently present. And if we recognize it, acknowledge it, and then exercise that, maybe we can do more. And of course, right, we got to bucket. Sorry, right, we got to bucket these things, right? That what I'm describing maybe applies on the product design, coverage, pricing kind of side of things. But of course, innovation can be in other aspects of the
Other,
insurance business and value chain.
yeah. And so there's one other point around this constraint that I wanted to explore with you, and then we could go into the next segment. Is, tech and data, you already, alluded to that at the beginning, that is playing more and more of this enablement role. Um, and so in talking to some of the CIOs, some of them are under pressure to kind of lead innovation and own innovation, and then some feel like, hey, I own the implementation of innovation, but I don't need to be the one owning the chaotic process of coming up with a new risk product, or a new coverage, or a new geographic area to explore a new product, and things of that nature. So I'm curious if you have a perspective on that.
Yeah, look, I don't know that there's a right or wrong here, but I do think that we find that there are companies where CIOs are expected, or they themselves take the perspective that yes, they will shepherd in new technology, they will shepherd in new processes and new ways of doing business, conducting business. Uh, but the actual identification and sort of trial with some of this goes beyond their scope, and I think that's probably why we've started to see innovation groups being created
Formed.
that
Yeah.
that are outside of the tech or ITIS
Yeah.
organization.
Like a chief
Uh,
strategy officers or chief innovation officers are seemingly common these days.
yeah, yeah, not every company I go to has them, but it's not uncommon either. So I think there's a fair you see it
Balance.
kind of all over on that spectrum. Um, so maybe an interesting angle to kind of just touch a little bit further, right? Is that okay? Well, you see both, and I'm saying I don't know that there's a right or wrong, but is there something that makes one model more appropriate for an org versus the other model? Uh, Maybe you have some thoughts on that.
I think the whole model brings back this concept that I wanted to maybe use that as a piggyback for the next segment. It really depends on what kind of an innovation company that and the insurance company want to be, right? Everybody needs to be. If you're an organization, if you're a commercial organization, you have to innovate in order to sustain, and you have to innovate to both drive top line and the bottom line. But the default mode is what I think you and I kind of debated this, and you introduced me to this idea that it's a small I innovation is the default mode, where you take what is already proven and established in the marketplace and incorporate that, and kind of improvise or introduce new products or improvise existing, or the big I innovation, where you truly lead the charge in leveraging technology, data, and ideas to introduce something fundamentally new in the marketplace, and lead the charge. I think most insurance companies are gravitating towards that small I. Some are doing the big I to varying degrees, and so who owns it, and how what's the role of a CIO in taking charge of that? I guess depends a little bit on the perspective of what kind of an innovative company that insurance company is. Is it?
Yeah, I think there's definitely a role of that. This big eye, little eye kind of innovation, certainly not my idea. I think folks that study this stuff talk about it. And just to be explicit, like you were saying, uh, little I, innovations are items that have been innovated in the world already. They're maybe even in the insurance industry already, but they're not widely adopted, or so widely adopted that one would consider them mainstream. And then the big I is innovation is something truly new and not done before. Sometimes, right, it's transferred from another industry, and then it's not a direct transfer, so there's some refinement that needs to occur. So sometimes that is also included under the big I innovation umbrella. But yeah, I think there's certainly that aspect of well, as a organization, where do we want to put our energies? And of course, there's also this idea of it's not one or the other. You have to
Could
do
be a combination of both.
some amount of each. And there's different models, right, that the strategy consulting firms out there they put forth and business schools put out. But I think there's another aspect, right, which is that are we looking to create innovative solutions within the company, or are we looking to identify them out in the market and bring them in by finding a good application? Or conversely, going back to this business-led idea, which is that we are trying to improve such and such process. Now let us go find, are there solutions out there already that can make and bring those improvements?
Yeah.
So this scouting, right, sometimes ends up being what a strategy or innovation group may do, and they may try a few things and see how well they apply. And once they identify that, okay, this specific solution is appropriate for this particular problem or improvement that we want to make, then Miss CIO, I need help from your org to kind of bring this in. And that's where that responsibility then begins. So I think
Yeah.
that also has a role in this.
No, I think that's a great point. I do think that a lot of insurance companies are doing all three, right? At least the big ones, internally innovating, maybe even introducing completely brand new stuff, and then to your point, like finding solutions from the outside, either bringing them in or investing in it. In your mind, I wanted to maybe change the format a little bit for the next, let's say, 5 to 7 minutes. Is like, in a quick fashion, are there any big I innovation that comes top of your mind as you're working on several insurance and projects, as we collectively in the market work on, like what comes top of your mind in terms of some big I innovations that obviously it's just not established, may not even have any real world examples. There's probably not a ton of use cases, etc., but still emerging.
Yeah, it's kind of, I think, the very nature of this, right? That the big I innovation is something that just comes out of left field in some cases, right? Where you haven't thought about it and somebody else does. And then some of them become, oh, this is really a unique idea. And others are like, well, now that you say it, it's obvious, right? So I'm not
I'm
in the,
thinking, yeah.
yeah, sorry.
No, I'm just going to put words in your mouth. Like, what you think, what you think of that biometric data being more and more available? Because my phone is, as I upgrade my iPhone every, whatever, I feel like it's already asking me for as much data as I can. And then I have a watch and it is tracking my, etc. And it's going there. So there's a lot of this biometric data is now becoming available for insurers to do whatever they want, right? To do better underwriting, to do better pricing, or to just analyze the marketplace, etc.
Yeah, so I think I had two thoughts in my mind, right? So one of them was from the life underwriting side, that so far, at least from what I see, there is no replacement of health history as the gold standard for predicting mortality. Uh, I have not seen anybody talk about something that is a better predictor. Now, yes, companies talk about doing that is invasive and creates a bad experience. So can we find acceptable alternatives? And that's where some innovation has occurred. But I think this would be a big I type of innovation if at some point we can identify some set of biomarkers that are a good predictor of mortality, better than individual diseases that one may have already contracted or be managing.
Yeah.
The other one, right, is on uh, weather, climate, storms, these sides of things, where it just I think in the last week and a half with one of our AI colleagues who kind of keeps tabs on research that's happening, right, was sharing some of the work that's being done on uh, sort of climate and weather modeling using machine learning models. And at some point, I think there will be a breakthrough there that will play a significant role in, some of the challenges that in insurance we're today. I mean, we're facing them as a society, right? But
Correct.
since we're talking about insurance, I'm just focused on that part. I
No,
think there will be some role of that in how products are created, how insurance is priced, and how risk is
and
selected.
related to that, another big idea that I've seen is the whole idea of risk modeling itself. Take, for example, like a climate risk, or particularly, let's say, flooding risk, and say specifically around North America. Then, is there a way to completely commercialize that risk model for North American flood risk and have a company own the intellectual property around it and then become the most sophisticated? Maybe there's other companies that will compete against them, but at least that becomes an industry in itself, that where a particular company commercializes the risk model around specific risk, and then insurers tap into that and then extend and use it, as opposed to each insurer having to do this all inside their organization as part of their product and pricing and underwriting.
Yeah,
Right?
I think that is absolutely sort of where, at least if I'm a carrier, I do expect that the weather experts and the forecasting experts will do this work, and that's where the genesis of something will occur. And then it will have to be seen how specific, how proprietary
Of course.
versus how general and sort of readily available it is for everybody to kind of apply it in their own context on their book of business or their target sort of market.
Correct. And then this whole idea around dynamic pricing is another one that is evolving in the P&C space. I have seen more and more, especially around the idea of gig workers and and sharing and cars being out on part-time rentals and stuff like that. So instead of owning an insurance that stays static for your asset for the whole month, like if that asset that is being insured is literally on the road moving in and it being exposed to some sort of a risk, then
Yeah.
pricing kicks, and then even the asset is literally in the garage, you don't pay nothing.
Yeah. I don't know where I would put this, right? Is this sort of something that's
Incremental.
incremental, or is it something that is truly, groundbreaking? Why I say that, because there's elements of this that are already in place, and companies are doing it. The other side of it, right, is that the idea is not new, right? The idea has been there. I mean, even the most traditional of auto policies, right, in the application will have a question of, well, how often do you drive? How much do you drive? And then the price is based on that, right? If I drive, I don't know, 200 miles every day versus somebody that drives only 10 miles a day, right? Our prices are going to be different. So the concept has already been there, right? The mechanism to identify actually the duration of driving and all that is what hadn't been
It's right.
available, and now through devices, it's is already being collected, right? It's not even like that is new. So where I think the issue is, um, can this be actuarially sound to make underwriting and pricing decisions off of this? And where it comes down to, right, is that um, fundamentally, right, we're talking about group insurance, right? There's a group with some characteristics, and they smooth out the uniqueness of any individual member of the group. But the moment we start to personalize it to such an extent that the price is specific to the
Almost like
individual,
exactly.
then have we not broken the group concept? So I think this is where some of the challenges I've seen are occurring, and it starts to get beyond
So this is
um,
yeah.
a can we do it type of question, but it's more about a
Should we
policy
do it?
governance type of question. That is that
Or
what we want?
regulation, right? So this goes back to
Correct.
that original constraint is that maybe technology and data and tools and even will do it, but should we do it? And maybe regulation will protect them from doing it because it breaks the whole premise of shared pools of risk
That's right.
and
That's right. And
and
if it
not
doesn't fully
selections and
break
things like
it,
that.
it at least creates big dents in it. And by
Correct.
the way, right, again, not quite in the dynamic pricing based on time of day or where you're driving and all of that, but which zip code do you live in, right? This zip code has higher theft, and now you start to have there's higher theft because of socioeconomic reasons, and you know what? We're going to make their insurance more expensive, and then get what happens, they become more socioeconomically disadvantaged. So right, these kinds of policy governance regulation type of issues start to crop in to some of this. So um, I think they have a role in why some things that on the surface seem like, well, we ought to be able to do this,
Yeah.
they don't move, they get stuck with these kinds of considerations, which are not really widely discussed and in the common conversation.
Yeah. Well, since you touched or questioned the idea of the dynamic pricing as a big I or a small I want to bring up one or two examples from the small I space, just to maybe relate to some of our audiences who may already be thinking about some of these things. In cyber risk insurance is an interesting one in my mind. I remember in a recent client meeting you had mentioned that, hey, maybe we should think about introducing a cyber risk insurance product, and I think many insurance carriers are not dabbling with it. You saw, one of the cyber risk insurance carriers recently getting acquired by a big carrier. So, do you think cyber risk insurance will become more and more? It has been there. In fact, there's a more and more need for it, but I don't think necessarily all the big brands have cyber risk insurance in their portfolio. But I do think it's a small I. It's not a big I innovation. Um, so why do, and is it something that it is tech driven to the point that the business is not able to um, create and design and underwrite and sell and manage claims and things of that nature, right? Because it's such a tech and data
Yeah,
intensive product.
yeah. I mean, it's an area where I would probably say I'm not too familiar with the kind of nuts and bolts of what is actually at play, and what is the opportunity, and why are companies hesitant. But at least as an observer, and I am a participant in this space, whether I want to be or not, right? In the sense that each of us carries a cyber risk with us, right? Identity theft, and breach of financial information, and fraudulent transactions on our bank or credit cards, right? We each carry this risk, and I think it's one of those instances, right, where how many of us actually reflect on it and think about, well, do I carry cyber insurance the way I ought to? Uh, and then you can generalize it to, well, why are we looking at just cyber, right? I have other kinds of uh, sort of liabilities as well
Liabilities,
that
right?
I generate. Do I have umbrella policy for myself, or do I rely on my auto carries some liability coverage, my home carries some liability coverage, and that ought to be enough? And do we tie it to our overall financial situation and look at well, maybe the limits on those inherent liability coverages are not sufficient, and I should have an overarching umbrella. So I don't know, right? There's kind of these loose
Yeah,
threads, like
there's
I'm
just
saying, that as an observer I have uh, as an individual. As a company, right? You get to, sure, we're a large insurance company. We have products that have maybe some riders for cyber, but do we have a true cyber insurance product? The answer may be no, and you start to unpack it. Well, why not? And it goes to sort of the fundamentals of, do we know how to
exactly.
rightly identify the exposure a certain business has for cyber risk? And then even if I can rightfully identify the cyber risk, do I know how to properly price it? um, the recent sort of information I was looking at, right? You start to see that uh, cyber liability claims have seen an uptick in 2023, right? First half of 23. I haven't seen the full
Definitely.
year data. I saw the first half data. They are significantly higher compared to before. So, okay, well, it's because there's more activity, right? Cyber activity occurring, and there's more incidents, more breaches. So there's more claims. Did we charge enough premium for it? Did we know enough to, anticipate the volume of this activity? So, and if we didn't, right, it's a losing proposition. So maybe I stay away from it until somebody has figured out how to model this correctly, and then once it's done, I can start offering a product around it. So some of these aspects are what come to my mind. Like I said, I've not really looked into it very specifically, so this is just all speculation and conjecture.
No, quite all right. I think in the interest of time, maybe we could bring it back home and take a few minutes to close it. I think we both feel like business-led, tech-enabled innovation is the way forward, but we also recognize that there's a spectrum and that some carriers are in that traditional small eye type innovation where they're certainly doing a lot of interesting things, but they're waiting, watching for all these bigger innovations in the marketplace to mature and then bringing it in. And then there are a few that are doing the big eye And we have seen where there's big eye, there's a concerted effort to put the people, process, maybe even a set of R&D labs, access to a ton of data, and even a strategic governance on top of it, and things of that nature. And then partnerships like whether it's about the X by 2 or other firms like X by 2 embedded in that innovation space to drive that big eye innovation. Uh, and another interesting topic that I know you and I talked about, and I want you to chime in a little bit, is this idea that is insurance inherently setting a very high bar for new technology to clear?
Yeah, look, I don't think that it's inherent to insurance. I just think that um, it's true of any innovation and any technology, right? That you have a status quo, and you have things are done a certain way, and to have radical change, the benefit has to be far greater than all the friction that comes with introducing uh, a new way of doing something. So I think that's just inherent in
Any, but otherwise
any change. I don't think it's
it does
unique to
take
insurance.
the path of least resistance, like you're alluding to, right? Then it becomes okay. We'll either not adopt it or it will just go away because it just doesn't cross that threshold.
Yeah, yeah, that's right. I think we know we see this sort of in many instances where some innovation occurred 20 years ago, but it's only 20 years later where it finally gets adopted. Why? Because now is when some other ingredients and the timing of it were right for it to be easy to adopt. So I think it's that phenomenon, right? That unless the surrounding circumstances are not favorable, uh, some innovations, while they may truly be innovative and relevant and applicable, but the economics don't allow for them to take hold and take root.
Correct. No, and I want to wrap up with this thing that AM Best now has an innovation score. Presumably, some of the folks who listen to our podcast are already aware, but for those who don't, hopefully it doesn't come as a surprise that a traditional rating firm that rates insurance companies based on their risk profile and strengths and things of that nature is now also scoring them on an innovation capability, and so maybe it's a kind of a pivotal point for most insurers to say, hey, we have to put a process and a set of capabilities in place, as opposed to just having your traditional businesses doing what they're doing and IT is doing what they're doing. Sometimes we bring ideas to each other, we do some stuff, but innovation almost organically happens versus do we have a set of core capabilities to truly drive innovation methodically inside the organization.
Yeah, it's something I became aware of. I probably want to say 4-ish years ago that AM Best had started to do something like this. Uh, I have seen them sort of be on the roadshow, right? Of outlining what is their methodology for how they evaluate, degree of how innovative a company is, and all the factors that go into it, and then once they have a score, how they roll it into the overall rating that they provide. And I think so far they don't bake it into the overall assessment. It's a additional score, if I remember right. But yeah, it's now they have a specific report on who is how innovative, and how they rank and how they are doing compared to peers, and all of that. So when a rating agency is starting to measure it, right, it's already, I think,
Time,
uh,
right?
past its time, right? So
Yeah, well said. Well, with that, thank you guys. We appreciate you listening to us. If there are any innovative ideas or topics that are out there that we should explore, we would love to hear from any of you on any topics. If not, I'm sure we'll look forward to hearing from you on all the other podcasts as well, and talk to you on the next one.
And that's a wrap for today's conversation on PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.